How the U.S.-China trade war has reached a turning point. Chinese President Xi Jinping, L., holds a grand ceremony to welcome U.S. President Donald Trump at the square outside the East Gate of the Great Hall of the People in Beijing, capital of China, November 9, 2017. Xinhua News Agency Getty Images Jenny Leonard, and Doc Curran, Bloomberg April 18, 2019 Senior U.S. and Chinese officials are scheduling 2 more rounds of face-to-face trade talks in an effort to reach a deal that President Donald Trump and his Chinese counterpart Xi Jinping could possibly sign by late May, a person familiar with the plans said. U.S. Trade Representative Robert Lighthizer and Treasury Secretary Steven Mnuchin plan to travel to Beijing the week of April 29, according to the person, who spoke on condition of anonymity to discuss internal deliberations. Xi is preparing to host more than 40 world leaders at the Second Belt and Road Forum in Beijing in late April. After Lighthizer and Mnuchin's trip, Chinese Vice Premier Liu He may come to Washington for negotiations during the week of May 6, the person said. More from Fortune Briefing, which stores are open and closed on Easter Sunday 2019. Features how Bill and Melinda Gates are transforming life for billions in the 21st century. Design: the minimalist design wave taking over classical Rome. On April 4, Trump said it might take 4 weeks to put together a framework for the deal and 2 weeks more to get the details on paper. We've agreed to far more than we have left to agree to, he said at the time. The U.S. and China are locked in negotiations to end the 9-month trade war that has roiled markets and threatened global growth. Mnuchin said on Saturday that the two sides are nearing the final rounds of negotiations. The Wall Street Journal reported the plans for more U.S.-China meetings earlier on Wednesday. The S&P 500 index was little changed after the report, down 0.4% at 2:27 p.m. in New York. Since December, a truce has kept the trade war between the world's 2 biggest economies from escalating. Under the agreement between Trump and Xi, the U.S. postponed indefinitely a threatened increase to 25% from 10% in tariffs on almost half the goods it buys from China, worth some $200 billion. American and Chinese officials have been negotiating since then. The dispute has already shaken the world economy and caused companies to reconfigure their supply chains. Even amid rising expectations for an agreement, the International Monetary Fund warned that the global economy remains vulnerable to trade tensions and urged governments to be very careful. 1. What progress has been made? China has agreed in principle to increase imports of U.S. agricultural products, along with energy, industrial products and services, as part of a path to eliminate its imbalance in trade with the U.S. that promise might form the basis of a preliminary agreement. Treasury Secretary Steven Mnuchin said in April that the U.S. and China were hopefully getting very close to the final round. One option on the table is for China to shift some punitive tariffs on agricultural goods that it imposed in 2018 to other products, helping Trump to sell any eventual trade deal to farmers ahead of the 2020 election. 2. What are the sticking points? The two sides are said to remain far apart on U.S. demands for structural change to the heavy involvement of the state in China's economy. Protection of intellectual property is another prime U.S. concern. China in March passed a new foreign investment law it said would deal with some of those issues. Trump says he wants strong enforcement language in any deal, yet his aides are still figuring out what that should be and how to get China to sign off. Officials in Beijing are said to be pushing for the U.S. to remove tariffs on Chinese goods. It's tough to see what the Chinese side will agree to beyond promises to buy more U.S. goods, given that it denies allegations of misbehavior that include forcing foreign companies to hand over their technology. The widening U.S. government crackdown on Huawei Technologies Company, a Chinese telecommunications giant, underscores a deepening strategic competition that will persist beyond the trade war. 3. What would escalation entail? If Trump walks, he could go forward with the higher 25% tariffs and other restrictions on Chinese investment in the U.S. China could reply with more countermeasures, such as diverting its purchases away from the U.S. that could prompt Trump to follow through on threats to slap duties on a further $267 billion of goods. The risk of economic damage on both sides, plus political damage to Trump in the 2020 election, might make one or both sides reluctant to escalate. 4. Why are we in a trade war? Trump points to the large U.S. trade deficit, the difference between imports and exports, as a symbol of a declining manufacturing base and the loss of American might. But the fight is also about who gets to set the rules for the global economy of the future. That's why technology is at the heart of the dispute, as evidenced by U.S. concerns about Huawei. Trump aims to reduce the trade gap by both browbeating and enticing U.S. companies to import less and export more. In addition to goods from China, he's imposed tariffs, which act like a tax on imports, on steel and aluminum from allies including Canada, Mexico, and the European Union. 5. What's been the impact of the trade war? Investors and executives routinely say it's hurt business confidence and upended supply chains. Apple, Starbucks, Volkswagen, and FedEx are among companies that cited a slowing Chinese economy in their outlooks. More than 400 publicly traded Chinese companies warned on their earnings. The IMF, cutting its forecast for the world economy for the third time in 6 months due in part to trade tensions, said on April 9 that global growth would be 3.3% in 2019, which would be the weakest since 2009. Meanwhile, the U.S. trade deficit widened in 2018 to a 10-year high of $621 billion, partly because the stronger dollar made U.S. exports pricier. 6. How has the conflict been felt in the U.S.? American shoppers have been mostly insulated, because inflation remains tame and the tariffs haven't hit staples such as clothing, footwear, and toys. That could change. A January report by Bank of America Corporation analysts said any escalation of the trade war would be much more painful for the U.S., triggering renewed market volatility and undermining investor confidence. 7. How has it been felt in China?